Good morning, good afternoon, good evening, traders. Welcome back once again to an exciting video in the educational series. Today, we've got a quite interesting topic to discuss. Today, we are going to do something like very different. We are going to learn about the candlestick pattern strategy and the most useful candlestick, which is always been underrated into the candlestick analysis, because mostly people trade this particular candlestick in a different way, but I understood this candlestick is most important in case if it's positioned in the right place. This is understood as the best in the in the market, and I have tested this time and again, and I've got the results as well. I'll explain you how it is exactly working as well. So hope you guys understand candlestick definitely, because you guys are experienced enough to understand. Just to start off with a quick note on this. So this is a full candlestick which I'm marking here. So here this would be the open. Just in any case, I'm just like putting a dot here. Yeah, this would be. This would be the open of a candle, and this would be the close of the candle. And if open and close are placed this way, this obviously will be a green candle, and this will be the top wick, which is the high, and this will be the bottom wick, which is the low. And this setup what we're going to discuss, and the setup what we're going to discuss is a super scalping strategy, which is used for an intraday scalping with higher accuracy. The accuracy is close to 95%. Believe me, traders, it's close to 95% the accuracy is. And provided you know how to enter and how to place the stop loss, how to get the target, this is a 95% record of consistency of giving you the profit. And there are some rules and regulations how it is being followed. Let us come to the first rule. The candle, how this is a normal candle, and this everybody knows this is a kind of a pin bar or a rejection bar. So but what I consider this is called as a retracement bar. I named this particular candle as a retracement bar. The first condition of this should be the body size of the candle should be 40% of the total height, should be 40% or less than 40%. 40% is an average thing. Less than 40%, if it's 30, 35, 20, 25, 10%. Here, if you can just look into this particular candle, I think the roughly, if you just look at it, the percentage looks like roughly about say 25%. So this would be a good candle to consider. So 40% of the candle height only should be there in the body. Less than that is always very good. This type of candle should be formed. Only these type of candles are formed. And how do we use this? Where do we use this? That's more important, because everybody, what is this candle actually telling is just imagine the candle has opened up here, it went all the way, and if this candle has to finish like this, what would be this candle actually telling this? The candle will be telling there are sellers coming into the market. The buyers are pushing the market up, the sellers are pushing the market down. That's what this candle is showing. If the opening is below the meaning if the close is below the open, then it's red. If the close is above the open, the obviously candle color is going to be red. The color of the candle here is immaterial. For our strategy, the color of the candle doesn't play any major role. It can be either green or red, that doesn't matter. But the position of the candle and the body of the candle is much more important. That's how the value is here. And there will be two setups which we discuss, and how do we take and how do we enter this candle, and which are the positions we are looking into the candle sizing. So this particular candle says there are sellers coming in, and in this side you can see the candle open is here, the close is here, so obviously this is going to be a red candle. But in this, what is happening is the sellers are pushing the market down, and then buyers are actually pushing the market up, which means it shows there is a buyer's presence, or the buyers are active in this particular zone. In this, what it shows, the buyers are actively participating in this zone. In this, it is showing the sellers are actively participating in this zone. So this is the conclusion for this particular candle, why a candle is forming like this and why a candle is forming like this. Now, the important thing is, okay, let's go to a little bit more space here. So how do the market move? There are two types of movement. The market, one thing is moves up, down, up, like this. There is a movement, and there is, this is called, everybody knows this is an uptrend. And okay, let it on a note, we will write this as uptrend. Okay, uptrend. Okay, now this formation is going to be considered as downtrend. This is a downtrend market. This is a downtrend. Okay, there's one more trend, what we call it as channel or sideways or consolidating. So what we consider this, we'll keep one name as a consolidation because everything is the same. Okay, these are the three different phases of the market. So this is an uptrend which forms a higher high and higher highs, and this is a low, meaning downtrend, which forms a lower lows into the market. So this is like, you know, in a channel, or you can say in a range. It's a range bound market, consolidating, or a distribution phase, everything, whatever name that you can put, it's going to be correct. So, and everybody knows, like, you know, an exponential moving average, you know how it works. Exponential moving averages, you know, and moving averages, there's a little bit of difference. Let's not go more technical into it. Exponential moving average gets adaptive movement of the market. It reacts to the market ups and downs much better than a simple moving average. So people on a particularly if they are trading an intraday, if they are scalpers, they use an exponential moving average. Here, the moving average, what it does is, you know, it shows the average, how many days moving average we are considering and everything. So that is what the average it's going to show. If you have a 9-period moving average, you've got a 15-period move. Some people take a 5-period, some people take a 9-period, some people take 20-period, some people take 50-period, some people take 100-period moving average, or even some people use a 20-period moving average, depending upon what is the style of their movement. So every moving average has its own benefit. So here, what are we going to use is, we are not going to use a 20-period, we're going to use a 9-period moving average. So 9-period moving average, when market is trending, it will always hug the you know, the candlesticks. It will always be very close to the candlestick. So that's one point which we will be taking into it. If you are considering an EM, you know, moving average in this particular exponential moving average in this particular zone, it will have up down, it will have up down, it will be in between the channels, or in between the candlesticks. The generally the moving averages will be running. So this is hopefully this you are aware of this fact, that, no, how a moving average moves in a consolidation phase, how a moving averages react on an uptrend, how a moving average will react on a downtrend. So possibly I'll just have a little drawing here so that you understand. A moving average is generally, it moves like this in a uptrend. This is a 9-period moving average, and most probably it's the same way the moving averages run on a downtrend. So this is a 9-period moving average which I'm drawing. It can be a, you know, up, down, or whatever it is. Like, I'm giving an approximate. Here it will be moving like this. Mostly it will be moving like this. So the moving averages here which I've mentioned is a 9-period moving average, which will obviously, you know, very close. The candlestick formation which we'll be looking into is a 5-minute candlestick formation, and this is how a moving average will be associated in case if it's a consolidation phase. In case if it's a trending phase, this is how the moving average will be placed, and this is how the downtrend moving average will be placed, because mostly the candlestick will be trading below the moving average. In case it's an uptrend, the candles will be placing above the moving averages, meaning all the candlesticks will be mostly above the 9-period moving average in an uptrend phase. So this is very clear, traders. Okay, now how do we use our super scalping strategy with the particular candlestick which is called a retracement candles. These are retracement candles here. Okay, so now let us understand. Okay, these are some kind of analysis. I always keep doing it when we are done with the trade. Okay, this I will try to explain in another video. So let's now get back to our thing. So here, um, I'll just cut this off here. I'll take a moving average. I'll go for exponential moving average 9 period. I'll go and change the color and style a little bit more darker. I would go for a black for you to make it a little more visible. Maybe yeah, this is fine. So this is a 9 period moving average which I've plotted. I don't have any other indicators being shown. The rest of the indicators I'm going to take it away. Okay. So let's come back and try to locate the candlesticks which we were discussing. Let's concentrate in this particular zone. Okay, let me take this out. Okay, in this particular zone we have to identify a candle which is showing a 45% and below the body strength. In an uptrend, the candlestick should be like this. This I failed to mention. This particular candlestick operation, we have to locate this particular candle only in the uptrend. This particular candlestick we will locate only in the downtrend. So initially what we're going to discuss or what we're going to see or analyze is only for the uptrend. For the downtrends we will see it after some time. Maybe let's not confuse ourselves. This particular candlestick shows the sellers are active in one particular area. So we will be trying to locate only this particular candlestick. Whether we call this as a inverted hammer or you have another name, I call this as a retracement candle. So let's see only on the downtrend. Sorry, only on the uptrend. We will try to find this particular candle only on the uptrend. That's the first condition. So locating the candle is the first point. Okay, here this is our 5 period moving average. And here in this particular area, you can see this is the first candle which we locate here. Okay, this is the first candle. And again, after that, you can see this is the second candle, this is the third candle, this is the fourth candle. So you can constantly, there's a bunch of candles, like, locating one candle is difficult, but you can find a bunch of candle. What is this showing? This is showing the market here. There are presence of sellers coming in. Every time the buyers are walking in, the buyers are pushing the market, the sellers are pushing the market down. So the minute you find a candle like this, for example, the minute you find a candle like this, you're going to mark the high of that particular candle. Okay, let me mark this high of this particular candle, or if you want to mark the next following candle, this is the high of the next candle here. Now what you have to do is, now you have identified. Now what is this candle? How are we going to trade? We'll be marking the high of this candle, and immediately we will go to the same at the money chart. We will go to an at the money chart. Currently it is 38,138. So we will try to take 38,100 call. Okay, so I'm not taking 13,100. Just let's see if this is the candlestick here, that will be the same candlestick there in the chart as well, in the call chart as well. So we will try to mark a 5 point above. For example, don't take exactly at the break of this, or just don't trade exactly the trade. Don't get initiated exactly just above this level. Keep a 5 point buffer in the CE chart. I'm not talking about the 5 point buffer here. I'm talking about a 5 point buffer at the money in the CE chart. For example, in this level, if the CE chart is showing 350, try to take an entry at 355 rupees. Try to take an entry only at 355. Please keep a buffer of 5 point. Okay, so this is the entry point for you. So now, why do you take a trade in this particular trade? Why do you take a trade in this particular candle? Here, market always gives you an indication that this area is only for sellers, and obviously there are so many people. All the people will be trying to eye for the downward direction. So the people try to get into the put, or the people always look for a downward movement from this particular 2-3 candles. So what they're essentially doing is they will be building up their positions for the downside. And just imagine if you are also in this particular part, what would you do if the market is going against you? Will you hold the position or will you sell the position? Obviously, the answer is you will sell the position. So everybody who has gotten to the downwards movement, or if they have gotten to the PE positions, they will all square off, and you can see the market generally moves very fast after this particular candlestick high is being taken off. So if you take an entry out here, your momentum of this would be much more faster, particularly when you're trading in options. You are going to be trading only momentum. That's going to help you. If the market is going to stop there, it's not going to help you, because your theta is going to eat your money. So here we will be looking into a momentum trade. So when market have a momentum like this, you can see the momentum. If the level is being taken off, you will immediately see a good momentum on the upside. You can see there will be a good momentum here. So this is what we are capturing. Now you enter here. Now where is your stop loss? You need to identify the next swing high position. So here we have marked the next swing high position. This is your next swing high position. So now your exit point from this particular level is going to be the next swing high. The immediate high you have to identify and you have to keep. Where is your stop loss? Stop loss is technically just below the candle. You need to go and mark a stop loss just below this candle, and you can keep a little buffer to it. Just try to find the next swing low of this particular movement and try to mark it below that particular level. You identify there is a small swing position here. The market opened up, it came here, and then it formed a swing. So your stop loss would be below this level. So let me mark your stop loss below this level, and your take profit would be just below the swing. Don't wait above the swing, just take it a little below the swing, so that you don't give the market that kind of space, so that it starts reversing even before it reaching the next level. It will sometimes get reversed and come back down, so you'll not be able to reach the target. So please put at least 5 to 10 points below your swing. So your target position is here, and from here you're going to go long position. For example, if it's above this position, you're going to have a long. Your stop loss is here, and your take profit is going to be here. So now you can see the market has gone up. It has triggered all the stop losses for the people whoever is looking for the downside momentum, and then it's immediately gone upside. Okay, now let's find another trade. Hope you guys understand, some of the difficulties what we find as a trader is, once we miss an opportunity here, we will be very it's very difficult for us to wait and enter when the market is actually moving on the upside. There are days when even in the initial days when the market is completely trending, we don't know where to enter. We'll be always looking for an entry for the downside. We always look for a shorting opportunity. The minute market moves up, how much it can move now. It's already moved 300 points. It's already moved 400 points. We always look for a downside move. We always try to short the minute we see a candle like this. The minute we see a candle like this, we immediately go and short the market, because we think this is a pressure to sell, and the market is going to fall from here. It's going to retrace to this level. It's going to retrace to this level. The market has moved up so much. We're always trying to find a place where we can short the market. This particular candle strategy, this super scalping strategies is going to help you find a location. Even if it's in a trending market, you will be able to enter into the market, provided you follow this rule very, very perfect. Okay, so now this is the second opportunity. So it is trading above the 9-period moving average. Point number one, that is correct. The second is the 9-period moving average should be in a 45. This is an important point which traders, I just missed the point here. How you enter the candle, that's more important. The first thing is your 9-period moving average should be plotted, and your 9-period moving average should be placing their positions in a upward direction, which means in in a slanting position which shows the market is moving up, that only then this strategy is going to work. It should be only like this. Your moving averages should be going like this, not like this, or not flat. When the moving average is flat, this strategy is not going to work. This moving average is when it start slanting upwards, when it is pointing at a 45-degree angle, that's when the strategy is going to work the best, or that is when you need to apply the strategy. Because there are strategies we can take a candlestick entry, but not every time that is going to help you. But when you satisfy all the points, when you satisfy all these kind of important points, that's when it is really going to help you. So the point number one, you need to identify the candle which is 40% and below 40% of the candle size of the body will be very good. So the second point is your EMA should be slanting upwards. It should be at least at a 45-degree angle, not at a flat angle. That is point number two. The point number three is mark the high of the candle, go to a call chart, put a 5 point above that particular candle and take a stop limit entry, and your exit would be, this is a scalping strategy. We're not going to hold this for a long time. We will be taking the take profit at the immediate next swing high position, and the swing low would be your stop loss. So that's the only, the strategies is very simple. The phenomena what we are following is we are trying to trap all the people. We are only taking the money from the people who made a mistake. That is where we make the money. You all know this is a zero-sum game. This is how the market is operating. The market tries to trap the people. The market tries to trap the people. On the opposite side, the momentum goes up very, very faster. Just see this particular position. You take an entry here. I'm going to mark this here. You take an entry. This is the first point you're taking. For example, if you missed the trade, now the second trade is here. Okay, now your stop loss is going to be here. This is going to be a stop loss. I'm going to move this here, and the next swing high position is here, because this is your technical position. So I'm going to take my profit just below this particular level. This is my stop. Now, the reason why this momentum has picked up is here. You find one candle, you find two candle, you find three candle in this process. Just imagine all these people were trying to push the market down, and every time I'll tell you, the market moved up consistently well. And there is one more profit zone here. You can also eye this area instead of going. That's a bit high position. You can even take a profit at this level itself. This is the first target position. Take profit, and this would be a second trading opportunity in case if you're going to take a trade here. Okay, as per this, you can take a point here. Even this is a very good movement. It's roughly about, say, 45 point of movement, which is like 20-25 points for you. If you're taking this, it would be roughly about 96 points of movement in index, which is very good. So the movement is initiated by the false entries of the people who were looking for shorting the market, and you are trying to take a trade when the market tries to move above them or above their stop loss level. People will start panicking, and we are going to take use of their panicness. We are going to take use of their false movement. If they are mistakes, we are going to make money in that. So that is where the market is going to give you the money. Hope you guys understand. So let us again revise this particular point. Identify the candle. The body of the candle should be only 40% and below. Less than 40% is very good. If it is 20%, see this particular candle which we have initially taken a trade here, this particular candle is like roughly about say 20%. This is even 10% or below that. So all these are like roughly about say 20% to 25% candle, which is very, very good. This is an entry. These are the candles which will create an people to go for the downside. The people will look saying that there are sellers here, the market is not going to go above this, I'm going to take a trade here, I'm going to have an entry here, because they feel that market will miss them and then go. So they wanted to take an entry even before the low has been taken up. They go for an entry here. It's not that, even we have done the same kind of mistakes before. Now with this particular strategy, you will be anxiously waiting for this particular candle. You will be anxiously waiting for the people who are going to make a mistake in the market. The second point what you have to do is you put a 9-period moving average, and the 9-period moving average should be slanting upwards. That's the second condition for you. The second condition for you is you need to make sure that your 9-period moving average is slanting upwards, not flat. Point number 2. Point number 3. You need to mark the high of it and go to the call chart and put a 5 point above that. Keep a buffer of 5 point above it, and your stop loss is below the swing low, exactly below the next previous swing lows. Whatever the previous swing low you're encountering it, you got to take it below that level. You put that below this level. If you're going to take an entry here, put your stop loss here, and your take profit is your immediate swing high. Don't wait to the top of the swing high. Just take a 10 point below or a 5 point below the stop loss or below the swing high, so that you don't miss the target. So that's how we're going to trade. Okay, hope you guys understood about this. Now we will go and check the same thing in the downtrend. So in the downtrend, the principle of identifying the candle is very simple. You need to look for an opposite side candle, in the sense we are looking for a candle which looks like this. We'll be looking for a candle which looks like this. What is this showing? This showing the buyers are walking in. So we are going to trap the buyers in a downtrend. So that is where your trend moves faster in your direction. So this is what the same thing in this. The only change what we are going to do is, like, your candles will be obviously trading below the 9-period moving average. That's how it is going to be in case if it's trending. So you're flat. So when the candlestick is below, meaning when the candlestick is trading below 9-period moving average itself, here it shows that you are your trend is started. Your trend is started, which means the angle is from here to here. The angle is already been dented down, which is your angle is already coming down. It's already slanting downwards. Here you can see the 9-period moving average is running in between the candles. It's running through the candle. So here, whatever the candle you're going to find, it's not going to helpful. So you can see there is a candle here. Are you going to take a trade above this level? It might give you a success, but you can see, yes, the market moved above this level. Yes, it got a target here. It got some kind of momentum here. But we are not looking for a 50% probability trade. Here, in this particular candle, everything is perfect here. Your candlestick looks same. It's trading above the 9-period moving average. That is also correct. You mark the level. The market did it move above that level. Yes, that is also correct. But the problem here is we have a flat 9-period moving average, which means the third condition or one of the three condition is not satisfied. So we are not into the trade. Okay. So in this level, when your candlestick is trading below the 9-period moving averages, obviously the trend is shifting downwards. When the candlesticks are trading above the 9-period moving averages, then you obviously know the trend is on the upper side. So this actually gives you a very clear indication where you really want to trade. You will never ever make a mistake of trading against the trend. This would be a trend following strategy. Traders, this would be a trend following strategy. That is where you make money. The trend is your friend. This is where you don't make a mistake. If you are trying to trade against the trend, the odds are against you. The possibility of making mistakes are more for you. Okay? So now, like how we located the downside momentum, meaning upside momentum, we will be trying to locate a candle which is for the downside. Okay, because there are so many points which we have written here, so let's not get confused. You can see I've used a 5-minute candle here. So we'll be looking into a trade. Exactly. So here, simple. Now, are you able to locate any candle which is showing a 40% body? Correct. This is not a 40% body. This is not a 40%. This is not exactly here. You located it. This is our candle. Guys, this is our candle and you spotted it right. The color of the candle is not making any sense for your strategy. We don't consider the color. We don't consider whether it is red, green, or any color what you place. We will be only bothered about the shape of the candle. Now, mark the low of the candle. The EMA is trending down. It's slanting downwards. Perfect. Are we able to locate the candle? A perfect candle to locate. What is this showing? The people are trying to enter into the market upside. The people are thinking the market is going to reverse from here. The market is going to go up, blow up, into the sky. They're going to break everything, make millions of money here. What we are doing? We are just waiting for the market to come below this level. Go to the put chart immediately and mark 5 point below this level. And take an entry immediately. Put the stop loss just above this level. This is your stop loss. Very good. Traders, you got this. You nailed this. This is your SL point. This is your SL point. This is your entry point. Oh, you got this. You nailed this. You find one trade in a day. That's enough for you guys. That's enough for you. Your target. Which is your target? This is your previous swing high. There is one swing here. Take your target just about this level. That's good. Just about this level. Very good. Take profit. Take profit. You don't have any problem in this. Your target, your accuracy is like spot on. I'll tell you, accuracy is spot on. Just about this level. See the momentum. We are scalpers. This entry is only for scalping, traders. This is only for scalping. You look at this 151 point. Believe me, it's 151 point. Okay. Please, only try to locate these kind of candles. Don't try to find your own type of candles. Only a candle which shows a, what do you call this, hanging man or a hammer or whatever. You name it, but we need this. I call it as a retracement candle, and this is my super scalping strategy, which I call as S strategy. Hope you understand. Please backtest it. We are nailing this every single time. Here you can see there's an uptrend. This is your candle. Above this, your take profit is above here. Very good. You never fail. Put your candle like near a stop loss, near a swing. This is a swing. Yeah, it might be a little different. Sometimes you have to take a little bit more levels, but you keep a decent stop loss for it. Because the minute the market starts trading above this level, I know it's not going to come back down for sure. Believe me, traders, it's not going to come back down. Because you are actually trapping the people. Let's find another trade here. Wow, what an uptrend. What an uptrend. You missed a trade here. Don't worry. Don't worry. You are into the trade. We will not miss this. You found this exactly the right place. Above this level, whenever this candle high has been taken up, you see in this level, it would be taking your position. Where is your target? You can go on the left side. If you're not able to find, don't worry, traders. We have a way. What is the way? We go to the fib retracement. You mark this position, this is the high, and you mark the next swing low here, and you take on the next fib level. This is your target. You enter here, your target is the next swing high. Exactly, this is your target. You get a good point. You trade one fib level full, and if you want, you can exit, or you can hold the trade. This is 124 point. Believe me, traders, 124. We exactly take it when the market moved upside. 124 point. Traders, this is a hidden gem. How many of your YouTubers have been telling about this particular trade? This is an uptrend. We are going to locate a candle. Don't worry, we don't miss this. We're not missing the uptrend. Don't worry, we'll again come back to you. Yeah, you got the point here. You take the entry above this level, and your next is your fib level. Mark your fib level above this level and below the swing low. Yeah, this is your immediate swing low, you take an exit here. That's wonderful. This is your take profit level. Yeah, how much you want? You want to know the point here? 78 points. Believe me, 78 points. You're not going to lose it. Never you're going to lose it. It will give you the money. Yeah, you just see this candle. You just see this candle, traders. You believe me, you just see this candle. I'm not joking. Just see this candle. A perfect candle to enter. Mark the high. Go to the call option. Take an entry above this. Your target is already there with you. Even before you think about taking a target, it's already like moved away very fast. Because this is a momentum trade. Are we here? Are we there to take the momentum trade? Here, no trade, because your 9-period moving average is cutting through every candle. It's like slicing. We don't want to take. Boss, we don't want to take. See, the market started, flat here, consolidation. After this, the market starting pulling down. Immediately finding a candle here. Okay, you missed this candle. No problem. Take a low at this. Just imagine you are into the trade even before it started. The trend, you picked up the first point of the trend. Take below this level, put above this level, your target, meaning your target is already there. Even before you think, just see the momentum, traders. This is what we are looking into it. So this trade, this particular candle is telling that the market is trying to go up. Everybody who had a trade for an upside are holding their trade positions, thinking that, see this candle, there's a huge wick rejection from the bottom. The market in the second candle or third candle is going to break. And to their surprise, market moved and traded below this level. Boy, I would run away and close my targets, meaning I'll close my positions. That's going to activate every bit of downside momentum. What else do you want, traders? Get one trade in a day, more than enough. And you are with the trend. That's the good point about it. We are only with the trend. We don't trade against the trend itself. You understand? Cool. We will be getting trades. Patience is the key, traders. So hope this particular strategy, this particular thing, I'm going to go back. You can do the back testing. So you've done enough back testing. I've already showed you. So these, I'll go have a quick a recap of what we have to do. So this is an uptrend making higher highs and higher lows, and this is a downtrend which is making a lower lows and lower lows continuously, higher lows and lower lows in this. Here the 9-period moving average, it's okay, I'll write it here as a 9-period moving average, 9 EMA, traders. This is not a simple moving average. I'm going to mark it as 9-period moving average, not more, not less. This is the 9-period moving average which is here. I'm going to copy this. I'm going to put this here. This is a 9-period moving average. Your candlestick should be trading above the 9-period moving average, and the second point is the 9-period moving average should be slanting upwards, which means the second point is also confirmed. And try to locate the candlestick which looks exactly this kind. This shows a better entry for you. So the condition number one, traders, 40% of the candle height should be the body of the candle. Less than that, wonderful, we are on it. And this candle should be formed just above the 9-period moving average. A 9-period moving average should be slanting upwards. Mark 5 point above the high of the retracement candle. Just go to the call chart, because we are going to trade only in calls. If you have enough money, go and take put and sell it. If you have less money, go for the call. We are using a scalping strategy, so it's always go for a call options, because you have to invest only less money for it. And I'll tell you, 95% accuracy. Believe it, traders, 95% accuracy. Always take at the money call or inside the money call. Don't ever take OTM. Don't ever take an outside the money call. It's not going to help you. The momentum will be slower, and your target will be the previous swing high or a Fibonacci levels. For a downtrend moment, what we're going to do is we're going to take a trade Based on this strategy, we will be identifying this candle, which is 40%. What is this showing? There are buyers coming into the market. We are going to trap the buyers here. So this is the candle to trap. Identify this. Where exactly when your 9-period moving average is slanting downwards and your candlestick has started trading down the 9-period moving average, you're going to identify. Once you identify, mark the low of it. You've got enough time, because it's the market is not going to run from here, because it closed here. It will make a time to move to this level. It is definitely going to take some time to come below this level. So you've got enough time. Go to your system, take a put at the money put or inside the money put, mark the low of it, put an entry. Don't worry, nothing is going to happen. It's going to give you enough time. Traders, the minute you take the trade, try to identify the target, try to identify the stop losses. Stop losses is very, very important, particularly when you're trading a scalping strategy. You either put that in your system or keep that in your mind. And I'll tell you, traders, you will never hit a stop loss. I can guarantee you that. Please do back test it and forward test it and confirm it. And please do hit the like button the minute you like it. And please do comment if you have any related queries. I'm happy to help you. Please do subscribe our channel. This will really help us to motivate. We are new into the system. We are new with the YouTube. We are new with the videos. But I promise you, traders, I'm going to come up with every week how to do a better trade, how to identify a better trade, how an important strategy which is actually kept as a secret by most of the YouTubers. I'm revealing it, traders. I'm revealing that kind of strategies to you. So I'm happy here. I'm happy that if you are going to comment, if it's negative, I'll be changing my strategy. I'll try to rework on what is the negative comments that you're going to give. If it's a positive comments, I take it with both the arms. I take it, yeah. If there's a negative comment, I will try to correct myself. I'll try to improve myself on my presentation. So thank you very much. Thank you very much for watching this video. Please do subscribe. Please motivate us, and have a happy trading days ahead.